Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the upside trend that began on Friday continued, ES balanced, then broke out again. And at this point, the nearest inflection point is at 21.10 half to 21.12 half with an open gap at 21.12. And given the strength in the overnight session, if we continue to balance in the upper part of the overnight range, then ES can quite easily tag the 10 half to 12 half initial resistance zone. That's still an area where responsive sellers can be active on first test, but we just have to understand that ES right now is the strongest market between NASDAQ and the Russell. There is a negative disconnect between the S&P and the Russell, but the way things are shaping up right now, it seems like the Russell can quite easily catch up to ES. So at the very minimum, we want to see TF maintaining some of the overnight gains and see a lack of weakness in that market. If we start seeing some heavy selling in the Russell, then that would definitely be a red flag, even for the S&P. But ES is the strongest market, so it is going to be the tougher market to short in this context. On the downside, we have initial support 2100 to 02 half. That's an area that buyers can defend on first test. Below that, 95 half to 97 half is very key. That's the breakout area from Friday and also near the overnight low. So even in the event of some selling coming into the market, we'd like to see ES holding above 95 half to 97 half if buyers are going to maintain strength. And if ES starts breaking below 95 half, then at that point it would have failed the overnight breakout as well as the breakout from Friday. So at that point, we'd have to readjust our bias and be a little more careful. But the way things are shaping up right now, it doesn't seem like ES is really even going to come all the way down to 95 half to 97 half. So right now, the expectation is that ES actually holds above the initial support zone, above 2100 to 02 half. And on the upside, we could get some sellers at 10 half to 12 half. Beyond that, 16 to 18 half is decent resistance. And from there, ES can simply balance in a range and kind of consolidate this short-term reversal and some of the recent gains. On the volume side, we're seeing that the relative volume has been around 70%, so we're running on below average volume, and typically that leads to a more of a choppier and range-bound type market. Now, it doesn't dictate where that range is going to get established, so just because we're running on lighter volume doesn't mean that we can't go higher. We can simply balance at higher prices from here. The idea is that the range potential of the day can be limited if the volume remains light. So that's something to keep in mind. The econ calendar is fairly light today. Factory orders at 9 a.m. Central Time. Nothing really major going on the econ front. So most likely, it seems like we are going to continue heading up to 10 half to 12 half. And from there, again, we can consolidate a bit, get some sellers in the market. Especially if the other markets are also hitting some short-term resistance areas. So right now, as far as the intermarket relationships go, the main one that we're focused on is the S&P and the Russell. And again, as long as we're not seeing any major weakness in the Russell, that'll be enough for ES to maintain the short-term strength. And then again, TF can start catching up to ES as well. So those are our main thoughts heading into the open. Let's see if the buyers can just maintain control today above 95 half to 97 half and above 2100 to 02 half. Aside from that, just expecting two-sided balance. So let's see if overall buyers can maintain control, identify a good trade location. Still going to focus more on the long side, and we can take shorts as well. Just have to be a little bit more conservative and a little bit more cautious on the short side because ES is right now the strongest market. So those are our main thoughts. Let's see how well the buy side maintains control, and we'll take it from there.